Assalamualaikum and hi everyone. Today we are going to learn about bad debts recovery. Bad debts recovery is a situation when an account receivable that has been written off as bad debts is eventually paid by the client or customer. Journal entries for bad debts recovery must be related to the method used by the company, allowance method or direct write-off method. If the company used allowance method, to reverse the write-off of the debt, we have to debit the accounts receivable and credit allowance for doubtful debts. Otherwise, indirect write-off method, to reverse the write-off of the debt, we have to debit the accounts receivable and credit bad debts recovery. The second journal, to record the collection of cash, we found that both methods use the same journal, debit cash and credit accounts receivable. For example, how do we determine when a business should use the allowance method or the direct write-off method? By looking in the information given in the example, we found that the company uses the allowance method because it has allowance for doubtful debts account in the trial balance. From the trial balance on 1st January 2014, we have accounts receivable 100,000 and allowance for doubtful debts 900. On 31st July 2015, Encik Ali has paid 300 his debt that was already classified as bad debts previously. Show the journal entries. The question required us to prepare journal entries to record the bad debts recovery. First, we need to put the receivable back on the books by debiting the accounts receivable Encik Ali and crediting allowance for doubtful debts 300. For the second journal, when we get the money from the customer that you have previously written off, we debit cash and we credit account receivable Encik Ali 300. The reason why we credit account receivable Encik Ali because if you didn't do that, it's as if you did not collect the receivable. Another example, by looking in the information given, we found that the company uses the direct write-off method because there is no allowance for doubtful debts account in the trial balance on 1st January 2014. From the trial balance on 1st January 2014, we only have account receivable 100,000. On 31st July 2015, Encik Ali has paid 300 of his debt that was already classified as bad debts previously. So the journal entries will be, the first one, we debit the accounts receivable Encik Ali and credit bad debts recovery because the company uses the direct write-off method. The second journal, we debit cash when we receive the money from Encik Ali, we debit cash and we credit accounts receivable Encik Ali. Finally, we are going to look at how accounts receivable is presented in Statement of Financial Position. As we know, accounts receivable is reported under current assets in Statement of Financial Position, meaning they are assets that a company expects to convert into cash within 1 year. Net realizable value of accounts receivable equals to accounts receivable less allowance for doubtful debts account. This net amount represents the amount of cash that management expects to realize once it collects all outstanding accounts receivable. That's all for today. Thank you.